was reviewing. Yep, so I was reviewing the previous episodes that we had, the ones that are posted on YouTube, and I realized we spent too much time talking or doing coaching stuff, or maybe that's the stuff that matters. It's okay. And some people feel like we are no longer spending enough time on the charts, so we are going to try to do that. But that is not to say if you have something that you want to ask that's performance based, trading psychology based, risk management based, doesn't mean that you shouldn't ask. So yeah, as usual, let us start with our trading economics. We have Canadian inflation news. It fell more than expected. So this is normally good news for consumers. When the prices of goods and other services go down. So it's normally good for the individual. For first time in a while, we have South African news. South Africa SACCI business confidence eases. Oil sinks for the second season. So we're going to look at oil as well. I think I have setups that we might want to take advantage of this week. So yeah, for expected calendar, what kind of news can we expect today? Already we had Canadian news on inflation, the CPI, which was negative. We are set to receive news on the New Zealand dollar, inflation news as well. It is expected to increase since the previous value was 0.4%. The forecast from investors is 0.7%. So we might go up by 0.3. So it's here's the thing. You might know that the news coming out at 3, but you find that nothing happens for 1 hour, 2 hours, and then on the third, fifth hour, then the market starts moving. So going through the news events is just for us to know what's happening, but timing it's really based on the charts. It also gives us a certain bias for us to know whether we're going to be buyers or sellers in that particular market. So my watch list. Like I said, this is what we were analyzing last time. Euro GBP. I think it's a setup that you can take advantage of. Let me download the screen. All right, perfect. Probably going to send it to the group as well. So yeah, Euro GBP, we are anticipating a further push to the upside. You may argue that we have touched the zone. I don't feel like until we pierce maybe 50% into the zone, that's when I'm going to be more convinced that we are pushing further to the upside. Okay, so what do I have as our watch list for today? I think we have something on US oil. We have something on gold. And as usual, we'll look at the dollar index, maybe with the dollar Japanese yen, and look at pound dollar or cable, GBP USD as well. What else? I was looking at US30, US32. So yeah, let's get started. The dollar index. Why do we normally start with the dollar index? It's because the dollar index basically measures the strength and the weakness of the United States dollar. Why the United States dollar? Most of the pairs that we trade are influenced by the United States dollar. So if you have an understanding or an idea of the potential direction on the US dollar, you will better time the other markets. Welcome, Kutala. All right, perfect. As usual, we start on a monthly time frame. I hope you guys can appreciate that. Me going on a monthly time frame first, what I'm trying to do is make sure that the highest of time frames is in agreement with what I'll be doing on the lower time frame. Or what I'm doing on the lower time frame is in agreement with at least two of the higher time frames. That's daily, weekly, and monthly. So if you can be in agreement with those time frames, the probability of your trade becoming a winner goes higher. So once again, if you can trade in alignment with the higher time frame on the lower time frame, the probability of your trade working out or making money is high. So hence, I always start on a monthly time frame, go down to a weekly time frame, just to see where we're going. So we're bullish on a monthly time frame, obviously bullish on a weekly as well. Let us see how we are doing. Let me remove this. So this was last week's analysis. Okay. Let's check on a daily. Daily is a little bit more bearish. But I would say right where we have this line, which is last week's yep, basically last week's candlestick. So current market price is here, and if we look at this price action, it does look like we're in fair value. Let us look at this from a candlesticks perspective as well. Remember, we are looking for a marketplace that shows imbalance, a marketplace that shows a big push to the upside or to the downside, because that signifies or that tells us that there's an involvement of a big player in that region. And we want to trade with the big players because statistically, they are the winners in the market. Also bringing in the logic of price, that if you understand that the weekly and the monthly are bullish, that is a sign that you need to be looking for buying opportunities. Then the question becomes where? Simple answer to that, a lower price. So current market price is here. So for us to buy, we need to look for a lower price. Why this one right here? There is another demand level, which is down here. So that's the long-term demand level. But for now, we can look at this one. I'm aware that most of you guys are not swing traders like me who'd want to go buy here. So you're looking to take this and get your 1:5, 1:7, and then that's it, which is very good. So hence we are looking at very close to current market price. It is because we want to trade today, not next week, as it happens for me sometimes. Okay. Oops. Up 3 hour time frame. I was just trying to go to 2 hours. Let's see, 2 hour time frame. So our demand level is I would say is this one right here. So dollar index, we're bullish, but for now we're looking for it to come down to this level and then push higher. Here's a question. Why do we need to analyze the dollar index when we are not going to trade it? Yes, first reason is we want to figure out the strength and the weakness of the dollar. But why did we have to get to draw a level? It is because we want to time our trades. Timing of the trade is the when to press the button, when to press the buy button, when to press the sell button. In this case, we'll be looking to buy as soon as the dollar index reacts to this. When we go to USD JPY, we buy it. When we go to GBP USD, we sell that. I hope that's making sense, ladies and gentlemen. All right, let us look at USD JPY real quick. USD JPY. It's not in this Watch list. Okay, let me search for it. Oh, if everything goes well, you guys will be able to trade directly from your trading view. No need to go to MT4, MT5. Working on something like that. Hoping it works out as soon as possible. Right, USD on a monthly time frame. As some of you suggested, let's spend as much time as possible on the chart. So let's look for market direction. Once again, I'm always going to preach this. Why do we want to find the market direction? It is to make sure that we take trades that are in line with the trend, to take trades that are of the highest probability. Okay. Someone saying running away from subscriptions on TradingView. Oh, Skutala. No worries. As long as you have an account with the broker we're working on, you'd get a free subscription for a year. So don't worry too much about that. So we're bullish on a monthly. Let us go on a weekly time frame. We're obviously bullish there as well. Doubtful of the daily, but let's look at it anyways. The best trend is whereby the daily, the weekly, and the monthly time frame are telling you the same thing. That's the best trend that you can get. With this one, from the daily time frame perspective, without doing a lot of work, without doing a lot of work, let me confirm something on a weekly first. Without doing a lot of work, I can already tell that we're bullish as well. So let me go to the time frame. But there are two areas. There's a short term area we can focus on and more long term. So the long term one is this one. We're gonna come back to it, but let us just go deeper within, go lower with the time frames so that we can see if we have something that looks like a maybe let's start on 2 hours. That looks like a level that we can buy from. So what's the best level that we can buy from? It is a level that is going to give you something like this, a level, a level where the market would push maybe down, have some brief consolidation, and then push aggressively to the upside. Not like this. See, there's a difference between these two uptrends. They're both uptrends, but this is the one that we're looking for. This is the one that has high probability setups down here, down there. And this is what we call fair value. Okay. So those are the things I'll try to keep on repeating, because once you understand these small things, trading will be easy. Easy and boring, but profitable. Easy, boring, but profitable. As the saying goes, keep it simple. Keep it simple. So if I would have to look for a buying area here, it's very, very tricky. It's very tricky. And I think I understand why now. This whole area is fair value. This is why I can't find a clear area to buy from. Maybe let's check on a 15 minutes. 15-minute time frame is the lowest time frame I go. That's the lowest time frame. Forgive me for very slow internet. Um, yeah. I cannot accept that area. I cannot accept this area. It's fair value. So that means we need to go lower. We need to go lower. So we need to look at these areas. Let's wait for the chart to load again. And I have been getting some very nice reviews about how most of you guys are improving based on these live sessions, and I appreciate those. And I'm happy you guys are implementing what we normally talk about here. It has taken us back. But yeah, this is the area we were looking at, even though we're looking at it from a 30 minutes time frame, but clearly it's fair value area. And the area that we're looking for that has an aggressive push to the upside, because the daily, the weekly and the monthly are bullish, which means we need to be looking for buying opportunities. Why is this chart not loading? There we go. It is that area. Go to 2 hour. So let's see how price reacts when it gets to this area. Oh, today this Wi-Fi is the worst. Yep. Okay. I would even go lower. I know I had said it is this one, but going into this 2 hour time frame, I also realized there's this one here. Remember, let me go full screen mode. This is a drop base rally, and this is a rally base rally. So I'd prefer going for that one. Let's make sense of it logically, right? You want to buy a car, and when you get to the dealership, let's say the same car, maybe it's a Mercedes-Benz second-hand CLA 220. Let's try to buy this. You get to the dealership, they say, 250K. But there is an option to also get it at 220K. Which price would you go for? Or if someone gave you a tip that, you know what, you can negotiate the same car and get it at 30,000 rands less, which price would you go for? So now you have to think like a buyer. Which price would you go for? Think like a buyer. Would you buy it at 220,000 or you'd buy it at 250K? Absolutely. You'd want to buy it 30,000 less. Yes, Pindi, you'd want to buy it 220K. So hence, we are going to delete this level of demand. This is why you normally see I'm sure you've experienced this, especially as supply and demand traders, where you place a level and the market just goes through it and goes for a level that's lower or a level that's higher. It is because of this logic that I'm talking about. Maybe no one has ever explained it so simple to you, but it really is that simple. It really is that simple. Someone has just advised me, yep, this does look like a qualified area of demand as well. That is close to current market price. Um, yeah, it is qualified. It is qualified. Looking at the break of structure on the left hand side, right? We have that structure that was broken. We also have this huge imbalance, which price never got to come back to. We also have this area of, maybe someone said when I teach, or when I show you rather, this in the SMC format, it makes sense to them. Okay, so we have break of structure on the left. We have that area of imbalance. Think like a trader. Okay, what does that mean? If you're a store owner at this level, think like a trader. If you're a store owner, when price is at this level, where I'm trying to delete some lines, when price is at this level, as a store owner, maybe this is a restaurant owner, this is the price of milk. You're happy with the price of milk being here. But once the price of milk goes higher, that means your profit margins go lower. So that's bad for you. But as a trader, you want to see price aggressively going up. You want to see price aggressively going down. This doesn't work for you. Okay? Always keep that in mind. Pindi says, am I correct if I avoid the area where there's consolidation? Yes, you are correct. Yes, you are correct by avoiding that one. But we also, this 146 demand level is also a much qualified demand level, because now you are below, because here is the consolidation. Now we are below it. You can buy at this level. Be patient, wait for it. I see Nati is in this this session, one of I'd say one of the best traders I've ever taught. Remember what we always used to do, Nati. Let's just wait for it to come to us. Let's not rush into things. And this is where people lose money, simply because 1 minute you're in profit, 1 minute you're in losses, 1 minute you're in profit. Stop losses get hit for people who trade 1 minute, 5 minute time frames. It really gets messy. So let's look at GBP USD. Let me see if we can go through all of this. I think we're going to have like 15 minutes now. I'm really going to try to push through this. There we go. Let's go in a monthly time frame. The trend is your friend, right? So we're bearish on a monthly time frame, looking at the current candlestick. Okay. The weekly is bullish. So now we have contradiction. These are the kind of trades that I avoid. But to find some correlated trades, I'll go through them. Why do I avoid it? On a daily we're bullish. So daily and weekly we're bullish, but the monthly is bearish. So which one do you go with? I'll say go with the monthly, go with the highest time frame. Okay. So which means if the monthly time frame is bearish, look for selling opportunities. Yeah. So with GBP USD, it's clear that selling opportunities right up there. So we had a rally, base, drop, that consolidation, and we expect the market to always come back to that. So market was out of was out of balance here. So it was balanced for a while and then became out of balance. So market has to go back there. Someday I'll teach you about filled and unfilled orders. It's that reason. Let us say, let me make a simple example. Hopefully I'm gonna go through this file. 10 sell orders. Let's say at this level, there are 10 sell orders that are met by, let me see, 4 buy orders. Remember, the main job of the market is to reach equilibrium or reach a point where there's zero or reach a point where every buyer meets a seller. That is when the market consolidates, okay? That's the job of every market, but that's not where me and you as traders make money. We need the market to be out of balance. Right now, so a fair market, let me start there. A fair market would be 10 sellers met by 10 buyers. But in this case now, we have 10 sell orders that are met by 4 buy orders. What happens? We have 6 excess sell orders. And then the question becomes, now that we have 6 excess sell orders, the question becomes, where do the 6 excess sell orders go? The price will go down after the 6 excess sell orders. It will go down. Why is it going down? It is going to look for buyers so that the sellers can meet the buyers. Why is it going down? Because lower prices favors buyers. You may not understand it today. This is the reason price goes up and down, goes out of balance. Price dropped aggressively here because it was looking for buyers because there were 6 excess sell orders. Hopefully someday it makes sense. I'm gonna post this video on YouTube. You'll go through it and maybe make sense of it. So that is what I'm expecting from in the long term. Once again, from GBP USD, which means I would rather go trade USD JPY and leave GBP USD alone as a way of mitigating risk. I also wanted to go through West Texas oil, or what we call US oil. US oil. Okay, let me do that. I think, yes, I have it on my watch list. Let's go through West Texas oil. We have 2 types of oil in the market. We have Brent and crude oil. So we are bullish on a monthly, as you can see, but I would bet you we are bearish on a weekly, bearish on a daily as well. As you can see, we are bearish on a weekly and bearish on a daily as well. So what we are going to find here is what we call a reversal. As you saw earlier when we were going through the trading economics, it did say that the price of oil really fell. As you can see, this huge drop from areas of $76 per barrel. We are now at around 70. I believe we're going to get to $68 per barrel, and there's a potential that price bounces back up. And to me, I'm expecting that because of the war in the Middle East, and the Middle East is largest supplier of crude oil to the rest of the world. So if there's a war there, that means the supply of oil is threatened. That means the supply of oil is going to be very low. So when we have very low supply and demand is very high, then that's when we're going to have price going out of balance, right? Then we're going to see prices going up, right? If there are more tomatoes in a marketplace, the price of tomatoes is going to go down. But if there's a little supply of tomatoes in the same marketplace, the price of tomatoes is going to go up. It is that simple, ladies and gentlemen. From here, let's step down to lower time frames, like 2 hours, to narrow down our demand area. It is a beautiful one, ladies and gentlemen. Beautiful one.